Okay, Assalamualaikum warahmatullahi wabarakatuh. So my name is Muhammad Ismail bin Ismail. So today I'm going to explain about introduction for modern monetary system. So modern monetary system is the system that we use today. So the money is controlled by central bank and it doesn't have intrinsic value like silver and gold. Instead, it accepted because people trust the government. It also used for daily transactions such as buying goods, paying for the service, and for saving money. Okay, for Asian monetary system, for early form of money, first people use barter system where people exchange their goods directly without using money. But this method was not very convenient. Okay, next is they start to use commodity money like gold, silver, and shell because this item had value and were widely accepted. Okay, for the third is early civilization introduced metal coin to make trading easier and more standardized. So this method is more acceptable widely. Final is paper money. Paper money was created as a lighter and more convenient way to carry out transaction, and the paper money is still used until now. Okay, that's all from me.
Assalamualaikum warahmatullahi wabarakatuh. My name is Ainur Mardia binti Jarizal and my metric number is KH25158. And I will continue to talk about the one important stage in the evolution of the monetary system, that is the gold standard. Under this system, the value of a country currency was directly linked to a fixed amount of gold. This means that government guaranteed that their paper money could be exchanged for gold at a specific rate. And because of this, people had strong confidence in the value of money since it was backed by a physical asset. And one of the main advantages of the gold standard was that it created stability in international trades. Exchange rates between currency were fixed, making global transaction more predictable and reducing the risk of a currency fluctuation. However, the system also had several limitations. Since the money supply depended on the gold reserve, government could not easily increase money supply during economic crisis, and this lack of flexibility made it difficult to respond to issues such as economic recession and unemployment, which eventually led to the decline of the gold standard. As the global economy continued to grow, the gold standard became too restrictive. Therefore, countries came together to create a new and more flexible system known as the Bretton Woods system in 1944. Under this system, the United States dollar became the central currency of the global economy. The US dollar was directly linked to gold, while other countries fixed their currency to the US dollar. This system helped create stability in international exchange rates and encouraged global trade and economic to recovery after the war. In addition, two financial institutions were established under this agreement, which are the International Monetary Fund (IMF) and the World Bank. The role of the IMF is to ensure global financial stability and provide financial assistance to countries facing economic difficulties. Meanwhile, the World Bank focused on providing financial support for development projects, especially in developing countries. However, the Bretton Woods system did not last forever. In 1971, the United States stopped converting the dollar into gold due to economic pressure and increasing global demand for US dollar. This marked the end of the Bretton Woods system and led to the transition into the modern fiat monetary system that we use today.
Assalamualaikum and hi, my name is Afidan Binti Afizi. My ID number is KH24042. First, I will explain the modern fiat money system. Fiat money is not backed by gold. This means it does not have physical value like gold or silver. It is based on trust. This means people believe the money have value because of the government. It is also legal tender. This means it must be accepted for payment. The money supply is controlled by the central bank. For example, in Malaysia, Bank Negara Malaysia manage the currency. Next, the core principle of the modern monetary system. First, fiat currency. This means money is based on trust. Second, central bank regulation. This means the central bank ensure the financial system is stable. Third, monetary policy is used to control inflation and economic growth. Next, banking system support. This ensure bank remains stable. And last, financial market operation. This means the central bank buy or sell asset to influence the economy. In conclusion, modern monetary system depend on central bank to control money and maintain economic stability. Thank you.
Alright, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Adani Sifan bin Muhammad Adani and my matric number is KH23016. So as for my part, I will explain about the cashless economy. So a cashless economy is a system where financial transactions are done without using physical cash. So instead, people and businesses use digital methods to pay and receive money. So as we all know that we're using these days, cashless economy are the most basic one is right under the text itself is the Touch and Go e-wallet, GrabPay and also Boost app. Those three are the most main that I've been using in Malaysia as the cashless economy. Alright, so for this part is what actually the methods in the cashless economy. So there's only a few, which is the first one is the debit or credit card use, online banking, like you can use Maybank as online banking, RHB, Bank Islam and such. Mobile wallets, just as before, Touch and Go, GrabPay apps and Boost apps. QR code payment, which is there's just a small few QR that you can scan by your phone or through your own bank. And lastly is the bank transfer. So that is the payments method. So when it comes to this cashless, there's always going to be some advantages and disadvantages. So firstly, for advantages, you have the convenient and very fast, very safer, and also it's very easily to tracking of your spending of daily. So when it comes to these advantages, it requires internet and devices, risk of cybercrime and hacking or any kind of hacking, and also not everyone can easily adapt, especially people with old age that's not very used to using technology, but they have to adapt, but yet it takes times and it takes very hardly working to try it and try to adapt with it. So that is the about cashless economy. And also to talk about that it replaces actually the physical money with digital payments, making transaction quicker and more traceable, but also dependent on technology. Many countries, including Malaysia, are moving toward a cashless society where payments are made digitally through mobile apps and electronic banking. So that is basically about cashless economy. Alright, so next we're talking about the blockchain technology. So blockchain technology is a way of storing and sharing data in secure, transparent and decentralized systems. So a blockchain is just like a digital ledger, which is just like a record book, which can store transactions in blocks, links each block together in a chain, is shared across many computers but not controlled by one person or company. So that is the definition of blockchain technology. So exactly how it works about this blockchain technology, which you cannot see it. So simple, a transaction is what's requested as first. Then the transaction is verified by a network of computers, more than one computers, and then it will be grouped into a block. One transaction will be grouped into a block. Then the block is added to the chain permanently until everyone in the network gets the updated record. So that is how blockchain technology works. So the key features would have been decentralized, secure, transparent and immutable. That is about the blockchain technology. So as for the conclusion that I came up with is that blockchain is a secure digital system for recording transactions across many computers, making it difficult to hack or being altered. So it's very secure of blockchain kind of technology. Alright, next we're going into the cryptocurrency. Cryptocurrency, also known as crypto, is a type of digital money that exists only online and uses encryption to keep transactions secure. Cryptocurrency is also just like as money, which is a digital, not actually a physical one. Digital with no physical cash like notes or coins or any such. It can be decentralized, which cannot be controlled by banks or any governments out there. And lastly, it's very secure, which uses cryptography to protect transaction. So that is about cryptocurrency, which we all know the most basic one is about Bitcoin. Alright, so cryptocurrency also has their advantages and disadvantages. Firstly, it's the fast global transaction, which is very easy. And second one, it has lower fees. There's no need for banks, and also it's very high in security. That's the good advantages. And we move on to the disadvantages. The price is very volatile, which sometimes the currency can be rise or fall quickly, depends of many factors out there. Second of all is the risk of scam and hacking, which a lot of people can be doing, can be pretending to be a company that has a good currency and everything, and you can be scammed by it. The thirdly is about not accepting everyone. It has its own platform to do some cryptocurrency. And lastly, it has also a limited regulation. Alright, so cryptocurrency, as I go by again, is a digital money secure by technology and not controlled by any central authority, making it different from traditional money. So that is all about cryptocurrency. Alright, so now we already have come to the end, which is the conclusion of our presentation. So I conclude this by saying that the modern monetary system refers to the evolution of money from physical cash to a more digital and technology-driven system that includes online banking, cashless payments, and innovations like blockchain. It improves the efficiency, speed, and the transparency of financial transactions while still being regulated by central authorities such as we in Malaysia, such as Bank Negara Malaysia, to maintain economic stability. So in Malaysia, this system is evidently through the increasing use of digital payment platform such as the Touch 'n Go e-wallet, GrabPay and such, which supported by government initiatives to promote a cashless society. Although it offers many benefits such as convenience and financial inclusions, challenges like cyber security risks and unequal access to technology remain. So overall, Malaysia's modern monetary system shows a balance between technological advancement and regulatory control, contributing to a more efficient and inclusive economy. So that is all for our group presentation.